Katahia kakata kata I katahia kakohea. I kohea ki whea, ki te ki te huha āhaha. Au e nane ana te maringi o te wai o te kamowhiu a te hupe, ki a tangi ko te ihu, papa te whatatirio, hiko hiko te uira. Ngāru e te whenua ki te rau hihi, ki te rau ha. A tēnā koutou anō koutou e tāringa whakarongo mai ana ki tēnei whakāturanga e kia nei ko te whakāturanga tuarua o te aho tāhuhu. Tēnei te mihi atu ki a koutou nau mai, hara mai, piki mai anō ki tō mātou nei whakāturanga. Hoi anō koutou mā, ānei te paipai o kai kōrero, kai runga i te paipai, nā kōrero, kai kōrero e whā. Hoi anō tuatahi, me mihi atu ki a koutou, me mihi atu ki a rātou ko wehe atu ki te pō, nō reira rātou haere atu nā. Hoki anō ki a tātou i tēnei wā. Tēnā koutou. My name is Mark Ormsby and I'm here to facilitate the third series of our webinar series with Te Aho Tāhuhu. Today we've got a lineup of speakers from Kāinga Ora, from Westpac, and also from Lisa Nathan, who is from our Sorted Kāinga programs up in Auckland there. Hoi anō tātou, we're going to head straight into our first speaker, Eli Salmons, who's from Kāinga Ora, who's going to talk to us about the first home partner pathway. Now remember, whānau, if you have seen the first webinar series, we talked about the other two pathways. We had Debbie Bean talking about the Te Ao Taketake, the Māori pathway and the provider pathway, and the PHO, i.e. the progressive home ownership space. Well, this is the third pathway that we're going to talk about today, and Eli Salmons is here to talk to us about that. Tēnā koe, Eli, ānei tō wā.
Kia ora, Mark. Ko Eli Salmons tōku ingoa, no reira tēnā koutou katoa. Yes, my name is Eli, based up here in Manukau, Tamaki Makaurau, Auckland. I work, as Mark said, I work for Kāinga Ora Homes and Communities as the Senior Product Manager, specifically dedicated to the Direct Household Pathway, or should I say First Home Partner. In my brief discussion, I will provide an overview of First Home Partner, how it differs from the other pathways, and discuss a referral process for first home buyers or whānau that may seek your guidance. I am also fortunate to have Stephen Naiker here with me as a co-speaker who will enlighten us further on first home partner criteria, some of the processes for first home buyers to make a submission, and then further on from that, pastoral care. All right, so the purpose of First Home Partner is to increase opportunities for eligible first home buyers to access home ownership who have insufficient deposit or income to service a low deposit mortgage. First Home Partner is a shared ownership product and is structured so that part of the deposit or shortfall is provided by an equity partner, being Kāinga Ora, and will purchase the property along with the homeowner for a specific share in the property, in which the balance of the funding will be provided by the homeowner's bank. Households must do their best to transition to full home ownership, although we do have a goals management program that supports them within this period. In the event that households remain in the scheme beyond 15 years, there is an annual service fee, and the household must acquire the property within no later than 25 years of their anniversary date. It's specifically targeted towards brand new homes which received code of compliance in the last 12 months or off the plan's purchase. And these off the plan's purchase must have a land and dwelling package. 5% deposit is also required with the total purchase price. It is offered nationwide and available to first home buyers only once. I thought it would be good to highlight some of the similarities to the pathways mentioned prior, but also to discuss some of the differences that First Home Partner outlines. And I do want to highlight the similarities around the maximum annual income of 130K, And then we also have a priority group with Māori, Pacifica, and families with dependents. Another one worth mentioning is the multi-generational income cap, is also similar to the other pathways. However, the differences in First Home Partner look at Kāinga Ora being the only provider within direct to home ownership pathway. We only offer shared home ownership. As I understand, other pathways can look at other methods or structures. We also target a specific target audience of cohort B, which sits in that category of median to and above income threshold to achieve standard home loan, but can't get the necessary deposit together. We do look at the credit history or the credit makeup of an applicant as a soft touch and take into account some of the debt that they also must provide during our application process. So First Home Partner is a lighter touch sort of product. There we are different in terms of there is no financial pastoral care pre-application. Once we do receive an applicant, we do go through that process and send them away to the participating banks. Households and whānau also must identify houses within themselves. So once we give them an eligibility letter, we do ask that they have a look around their preferred locations and locate a house of interest to provide to us for assessment. One of the three main functions I'd like to touch on, and before we talk about the key takeaways, is the equity contributions. The equity contributions is determined during the application process, but confirmed during the approval of the application phase, and that approval is in the form of a shared ownership agreement. Households are required to contribute at least 5% deposit, as mentioned, and with the equity contributions, I do need to highlight that it is not a loan. It is it has no interest, and we do determine that from the application process. The maximum possibility equity contribution also is the lower end of either 25% or 200,000, so whichever is the lesser value there. Shared ownership agreement is a legal document between Kāinga Ora and the household during that approval phase, and it outlines some of the roles and responsibilities, such as the considerations or changes of circumstances during the 15 years. So there may be some sort of, within that partnership journey, there may be some sort of changes that occur, and with that document it sort of outlines what we can and can't do. With the goals and management program, it is that post-settlement service, that pastoral care that we provide all First Home Partner households or whānau. Once again, it is more of a lighter touch, and we will work with whānau on an annual basis and check in with them as to what those circumstances perhaps may have risen, or any sort of key aspects that Kāinga Ora may need to know of. We assign a relationship manager who is their key contact, and so they would work with the whānau just to check in, just around how they're going. Okay, so quickly onto the key takeaways. So one, unfortunately, the First Home Partner isn't available for whenua Māori just yet. Obviously, there is a difficulty around securing lending on the home, and so for Kāinga Ora, we do suggest the Kāinga Whenua, another product that we do have. So whilst we're working with iwi and Māori providers, we do suggest that there are other avenues or home ownership products that may support that type of purchase. And with home ownership products that Kāinga Ora provide, this is a suggestion around some of the products that we have that may align also with First Home Partner. So if an individual is a previous home owner and could come to us around the KiwiSaver, we would look at the ability to use that function. Also the likes of First Home Grant. So these type of support could assist you in your discussions with whānau or households that are looking to purchase as first home buyers. And one of the key takeaways there is just to reach out to us, and we can have those conversations that help you support them. And the last point there, obviously, referrals to Kāinga Ora. So anyone who meets that cohort B category, has a particularly good credit history, low debt, then feel free to send them to myself, to Kāinga Ora and to the First Home Partner pathway.
Tēnā koe, Eli. Thank you for that presentation. Before we pass it over to Stephen, who's also from Kāinga Ora, I do have a question for you. Tell me just what are some of the main objectives of the Goals Management Program?
The Goals Management Program has three main objectives. The first is ultimately to guide whānau into full home ownership and to get that transition to full home ownership and completely buy Kāinga Ora shares out. The second is to ensure that the property is maintained throughout the journey of the partnership, and until Kāinga Ora does purchase those shares. So they are the main objectives for the First Home Partner or the relationship manager to interact with and touch base with the household during that partnership journey.
Tēnā koe, Eli. I'm now going to pass it straight over to Stephen Naika from Kāinga Ora too, because as we all know, everything comes better in pairs. Tēnā koe, Stephen, ānei tōua.
Thank you once again, Mark, for the introduction. Kia ora, everybody, and thanks for the opportunity to discuss the First Home Partner pathway. So what I'm looking to pretty much cover in this little presentation of mine is what makes a successful application. A lot of people may be trying to get into a pathway with it being very new and entering into home ownership and trying to get into that ladder for the first time. So how can we make this a little bit easier for them? So from my end, we're looking at potentially 4 things to cover, which is submitting an application, the eligibility and pre-approval process, identifying a property, and also securing that property with Kāinga Ora and getting that full approval going. So a few things to cover off. So we've got our income criteria. So how does one obtain all this information? So it's pretty simple. Through the IRD website, we can generate the income summary report. We require 12 months of income from the date you've applied, so 12 months prior from that. Now, if a person's obviously self-employed, we'll look at getting their IR3. Now, if you're part year and you can't get an IR3, we're more than willing to accept financial statements via your accountant, so we can see whether if you meet the income criteria. So we've also got a residency status and criteria as well. Best way to get that sorted is a passport. That will cover basically not only your residency, but your age and also a photo picture. Now, if you aren't able to provide that, a license in conjunction with your birth certificate will do. Now, all of these will be witnessed by a JP as well. So that forms part of our statutory declaration form. Another thing to answer would be, whether you've owned a property in the past or not, or if you have any current interests. Main things we're mentioning in these is some people may come into the application process and miss out a few information, so that can delay them in trying to find a property. So that's one of the few things we'd like to cover. If you have an existing bank pre-approval, that does help when you're entering into our portal and applying. If you don't, that's absolutely fine with us. You can enter $1, but people to keep in mind that our estimates will be based off that $1, and we won't be able to give you a finite number in the eligibility letter once we progress through. We also would like to get a bit of information when you're submitting an application as to the household composition and who is in the application and who will live there. Ideally, we do not want to have an overcrowded situation where there's health and safety issues occurring. We want to avoid anything of that sort. And also, we just don't also want to promote or try and get people into potential houses that may be a wee bit more expensive. As we know, more bedrooms tend to be higher priced in the market. So if you're ideally a couple, you're looking at maybe 4 to 5 bedrooms, something to consider in that aspect. Now, all of our applications are done online at present. Current climate with COVID and such does not really allow any sort of manual processing at the moment. So all of that can be found in Kāinga Ora's website, and we can apply through there. So what does an eligibility and pre-approval process looks like? So once you've submitted all your information and supporting documents, we will provide an eligibility letter to a successful candidate, highlighting indicative prices we can support. Main reason we highlight the indicative prices is because people's circumstances may change. They may have to go to the banks again to confirm lending. The conditional pre-approvals may actually expire within the time frame before they get a property. Our eligibility letters are valid for 6 months, so a lot of things can happen within that time frame. So that's one thing to consider as well. And during our eligibility phase, we do like to have a conversation with potential customers as well about certain documents that we send through in regards to a commitment agreement, shared ownership structure, and also having discussion with our sales and purchase requirements and a type of properties that can be used via First Home Partner. Now, the sales and purchase requirements we talk about is mainly do not go ahead and sign anything without consulting us, mainly because Kāinga Ora will need to be placed in that sales and purchase agreement as tenants in common, as co-purchasers as well. Otherwise, that can be a wee bit difficult going back and forth with the developers and getting lawyers involved as well. The commitment agreement basically highlights how the structure works, and basically customers can sign or seek legal advice on all documents. We encourage that, and it's their prerogative to do so if they wish or not. Customers can take our letter to the banks and obtain pre-approval or look to have a discussion with them, and everything gets updated on their application online as well. That way everything's moving along swimmingly and we have all the information to assess within a timely manner. Next thing would be the identifying a property. So the household identifies a suitable property based on conditions of eligibility. So prior conversations we've had, the discussions of the household composition we've had as well, also based off bank lending and basically Kāinga Ora's contribution that we have highlighted as an estimate. So, and they returned a signed commitment agreement to us. We, Kāinga Ora, will also sign that and return it back to the customers saying, hey, look, we're in this journey together for First Home Partner, trying to get you into that property ladder. They return to us that unsigned copy of that sales and purchase agreement with our clauses inserted. We also look at certain things as well that can be highlighted to the customers, such as escalation clauses or sunset clauses, just to keep them more aware as well. Just so that they have an understanding of their journey within that home ownership space as well, and that potential clauses could be made well aware of on their side. Now, once all that's been done, we sign it and return it back to the customers, who will take it to the vendor, and we will look to identify a time frame as to when that settlement will occur. So we've moved on from that, identifying a property, on to now securing the property with Kāinga Ora and obtaining that full approval. So that's when we confirm such things as, hey, this is your deposit, your bank lending has been confirmed, all documents have been reviewed. We decide, cool, everything has been confirmed. An approval letter sets out to the customer, highlighting all the details of the purchase price, bank lending, Kāinga Ora's contribution as well. The settlement date is confirmed via 20 days from when the document has been signed, the sales and purchase agreement. And we, Kāinga Ora, notify our people and look to set that up. And also we have a discussion once again with the customers, ensuring them, what the process is, and also kind of introducing the relationship management side of things as well, and having a discussion with them. I think a few things to cover off as well is, we have the discussion with customers as well about you're entering into a property now, your journey to home ownership, and to be well aware of certain things that come with owning a home. You've got this rates and insurance side of things, and that we are here to have those conversations with in terms of with your relationship manager if you need any sort of guidance, and we can happily pass them on to other departments that may be able to assist that we cannot get involved with. So our journey is to try and help the customer as best as possible. Now, a few key takeaways in regards to my presentation. Once again, the smoothest way to get to an eligibility and approval stage is to submit all documents and all supporting documents. We don't want customers to have that unpleasant journey or the back and forth as well. They may lose interest in the product or may lose hope. So key thing is, once again, reading the website and getting an understanding, or even calling us and finding out what's required. The second key takeaway is this is a shared ownership product, so sales and purchase agreements need to be bespoke and include Kāinga Ora. So please do not go ahead and sign anything without consulting us as well. We want to help you, and we want to include ourselves in that journey. So get in touch with us, and also kind of understanding your current financial position and the market as well. I mean, things can change quite quickly, so keep that in mind in your journey. So once again, you're entering into new homes, potential expenses, that may occur as well. So keep that in mind. So those are three key takeaways I would advise anyone who is applying for first-home partner and is trying to get in contact with us. Keep that in your mind as well. That's about me from my side in regards to first-home partner and the application process. Once again, just want to say thank you for allowing us the opportunity to talk about this.
Tēnā koe, Stephen. Just before we move on, I do have one question that, can you tell me what are the key differences in the application process and in the shared ownership product that you have and compared with regular mortgage processes?
So with in particular with our one, certain documents are a bit bespoke. So there needs to be a little bit more discussion with customers and vendors, in particular that sales and purchase agreement with having Kāinga Ora involved as well, and adding in our clauses. So it's quite new, the product. So in itself, hopefully we build momentum and people get aware of it. But it's pretty much, please do not go ahead and sign any sales and purchase agreements without including Kāinga Ora. We'd like to advise clients of that.
Tēnā koe, Stephen. Thank you for your presentation. That was Stephen Naika from Kāinga Ora talking about the application process for the First Home Partner Pathway. Hoi no whānau, we're going to head straight over to Heiko Jonkers, who's from Westpac, to tell us about the banking side of things. Tēnā koe, Heiko, anei toa.
Tēnā koutou katoa, ko Heiko Jonkers toku ingoa, kei roto au I te Credit Strategy and Policy o te Westpac. Good morning, everybody. Thank you for the opportunity to be part of this webinar series. We're very grateful and feel very privileged to be involved. My name is Heiko Jonkers, and I'm part of the Credit Strategy and Policy team at Westpac. And one of the things that I work on is trying to work out ways that we can help families, whānau, into homes and make that journey into first home ownership much easier. And one of the ways we do that is with support for the PHO program. If we think about how families or how people traditionally buy a home, the borrower brings some equity to the table, and they combine their equity with their borrowing capacity, and if they're fortunate enough, then that is enough to buy a home outright. But unfortunately, as houses have increased in price quite significantly, we're increasingly seeing that that borrower equity and borrowing capacity is insufficient. And that's where Westpac is working hard to close that gap with support for programs such as progressive home ownership, to try and make that journey towards home ownership much easier. So some of the ways that Westpac is trying to make that journey easier is support for those PHO models. Shared equity is one of our main supports at the moment. We've worked very hard on that. We've worked very closely with the team at Kāinga Ora on their program as well to make sure that obviously we can support that wholeheartedly. We're also very interested in leasehold models and trying to work out ways that leasehold models can be developed. And for those who saw the previous webinar series, we're working closely with the Queenstown Lakes Community Housing Trust on their product to make sure that we can support that when families want to borrow to be part of that program. We also fund community housing programs, obviously, and we've worked with a number of trusts around the country to help them with funding models to get them into homes. We have various family equity models that we can leverage if families are lucky enough to have intergenerational wealth that they can rely on. We have models that can be utilised to leverage that intergenerational wealth if it is available. Some of the other ways that we try to help, if we think about that equation for buying a house, if a family can't afford the house, is one way is to try and make that house cheaper itself. And we're the only bank in the market that has an active offsite manufacturing funding program. And in that program, we have funding available for whānau who wish to buy an offsite manufactured house, and we are able to fund that house while it is being manufactured offsite. Most other banks will require that the house is paid for, or that their loan will be drawn only when the house is delivered, which means that the building of that house needs to be paid for either by the builder themselves or the family, which obviously in and of itself creates potentially an affordability issue. We also have a program that we're quite excited about called Westpac Warm-Up Loans, where we offer a $10,000 interest-free loan for 5 years to families, and that can be used to purchase heat pumps, insulation, or other ways to make the house a healthier place to live. And that's been quite popular in the market as well. If we think about progressive home ownership, we focus on that in two key ways. Number one, we focus very firmly on protecting the whānau. We want to make sure that any program we support will not disadvantage the participants. We do see a wide variety of programs come through, and it's unfortunate some of the programs that we see are almost predatory, and we are very clear with the people promoting those programs that we're simply not interested. Within our own products and services, we're very careful with our products to make sure that they're completely standard, that we don't have any additional hurdles and so forth that need to be met for people to take part. And we've got a specially trained team of people who can help applicants through the process. They understand how the PHO products work, and they can help applicants through that process and help them understand how it all works and make that journey as smooth as possible. Now, even though that we don't legally, we don't take part in the program itself, we're not a signatory to the shared ownership agreement, we do take a very, very keen interest in those shared ownership agreements and the rights and obligations that they contain. And really what we're looking for is that the risks and benefits of home ownership flow equitably to all parties. And that's really important. I mean, whānau are taking out a loan. It's really important that they receive benefit for that loan, the recognition of their equity, recognition of their ownership stake. And we have had to work with certain providers from time to time just to balance those rights out, and just make sure that providers don't contain any excessive or oppressive rights. The things that we really look for are a pastoral care program, and that is probably the most important thing. And the purpose of that pastoral care program is to guide whānau through, help with budgeting, help with financial advice, help with potentially the stresses of owning a home. I mean, it is a big commitment, and just guide the whānau, the family, through that process. We look to avoid fees and charges as much as possible. I mean, we do recognise that certain fees are required, but the way that we try and approach it is that any fees that are baked into the scheme, anything that is paid out that doesn't go towards equity or obviously slows down that process of repaying the equity to by the family. So we try and minimize any of those fees and charges, and like a bank, we really look for those fees and charges to be fully justified. We have seen agreements where there are plenty of rights for the agreement to be cancelled, and what that means effectively is that the whānau could lose the home. So we work very closely with that, make sure that those rights are minimised, and only if there is a complete breakdown in the relationship. The equity repayment, I can say that yes, there is a requirement to repay the equity, but we make sure that those rules are very clear, they're very transparent, and the valuation processes that support that repayment are very clear. That those equity repayment rules also have to be very, very carefully structured so that the bank can meet its regulatory requirements as well. And also we look for plain language in the contracts. And if we look at that list of points that we look for in the program, they are all there solely for the purpose of protecting whānau on the program and make sure that there is no harm really that can come, or that all the risks are completely minimised. So if families or program providers are thinking about taking part in a progressive home ownership program, so these are the points that I think are important to consider. First of all, please engage with us as early as you can. We've got plenty of expertise to help. We're very motivated to help program providers. We don't charge to help. And we have existing programs that we can just take off the shelf and provide to get programs underway as quickly as possible. And that can often save tens of thousands, if not hundreds of thousands of dollars in legal fees and consultancy fees. So please do come in and take advantage of that. And you would have seen the theme in the previous webinars. Don't reinvent the wheel. We have got those structures ready to go. And in that sort of open source ethos of the PHO ecosystem, we provide those structures completely free of charge. The pastoral care program, I'm going to reiterate it here. It is so important, and generally we will not support a program that does not have a pastoral care program. And that bullet point there is so critical. I mean, whānau will read the agreement, but they will remember the quality and the warmth of the pastoral care program. And what we do say to PHO providers is that the agreement may seem very legal in some of its structuring, but where PHO providers and where iwi can provide the flavour, if you will, of the program is in that pastoral care program. That's where you can really wrap your arms around the participants and guide them through that program, and that's where the quality of your program really comes to bear. And just some advice to whānau who are considering getting involved. Really engage early. Engage early with your chosen provider's pastoral care program. Understand what the commitments are, what the eligibility requirements are, how the home buying process work, what the nature of the whole program setup is, so that you have an awareness of what you're entering into. And the same really goes for the bank. Engage as early as you can. If you've not yet been accepted into a program, we can give you an estimation of how much you can borrow. If you do have an eligibility letter, then we will give you a pre-approved loan, and those pre-approvals are generally good for 6 months. And it's really important in that early engagement to understand what your borrowing capacity is, so that you can understand how much or whether or not you have enough equity from the program, your own equity, and home mortgage capacity to purchase that house. I mean, there'd be nothing worse than if a whānau has had an extended engagement with a program and then has come to the bank, and for some reason the amount that the bank can't lend, or the amount that the bank can lend, is insufficient to buy a house, and all that time has been lost. So I can't stress enough to engage early, both with the bank and with the pastoral care program of your chosen provider. And the final piece is to obtain really good quality financial and legal advice. It's really important to understand the legal requirements. I mean, the shared home ownership agreement and the mortgage agreements that you enter into are long-term agreements. And it's so important to understand how they work, what they mean, and what the financial commitments are. So if we think about three key takeaways, the first one really is that Westpac is committed to working with equity providers to create equity providers and whānau to create better outcomes. If I think about our CEO, I have seen our CEO celebrate a shared equity deal much more loudly than a big corporate deal. Our new CEO, Catherine McGrath, is very excited about shared home ownership. She loves seeing these sorts of things. So it is a field that Westpac is fully committed to. The second point is just stressing that pastoral care program. It is a combination of a good pastoral care program with a shared home ownership agreement is really the best platform for success within that program. And then for whānau, again, that early engagement with your chosen bank. And it doesn't have to be Westpac. I mean, we would love to work with you, obviously, but BNZ is also involved. And there are some smaller regional banks that are also participating in the in shared equity and wider PHO programs. So work with your program provider to understand what banks are available and choose the bank that's right for you. Again, it's a long-term relationship. So choose the bank that works for you. Westpac obviously is here to help you. And then finally, on my last slide, I've got some contact details for whānau. We've got a website link there for our shared equity program and how we support that. And that will link you through to one of our mortgage managers who can guide you through how that process works. And then for providers, we've got our two key people, which is Steve Atkinson and Fontaine Moses Takani, who head the program. And then myself, I work in the background in the policy and strategy side. But providers are welcome to contact me as well if there are questions. So thank you once again. It's been a great privilege to be involved, and I'd like to acknowledge the other speakers as well. So kia ora, thank you so much.
Tēnā koe, Heiko. Thanks for that presentation. Just a couple of questions before we pass it over. We've heard that banks do not lend on Māori land, which means that there are iwi with significant land assets, but who are unable to, I guess, open up the land for development. Why are banks nervous about lending on Māori land?
Yeah, that's a great question, Mark. Banks never want to be in a position where we have to enforce on culturally significant land. So we are working on programs where we can create a partnership with the Ahu Whenua Trust or the custodians of the land, so that if the worst outcomes possibly come to bear, we can work together with those custodians to try and create the outcome that we need to get our loan back. Potentially have some help to relocate the whānau to a more suitable home, and then get a new family into the home that was there. So it is an area that we're working really hard on. We haven't perfected our solution as yet, but I think we're pretty close. And if there are iwi out there who are thinking about papakainga lending, then please get in touch. We are keen to speak to you.
Heiko, does Westpac provide any special concessions or require any additional requirements from applicants?
Thank you, Mark. Yeah, it's really important that we've tried to make our loan application process as standard as we can. And sometimes that word standard has some negative connotations, but a key thing is that there are no additional fees, there are no additional hurdles. We use our standard valuation criteria. We've tried to make that application process as normal as we can within our environment, so that we set the relationship with the borrower up for the long term, because it is going to be somewhat of a 30-year plus relationship. So the key thing is that there's nothing additional to pay. There are no additional credit requirements. That the assessment of the borrower is as if they are a regular borrower, not participating in a scheme. And I think that part is quite important. We certainly don't make it any harder to get a home loan if you're participating in a shared equity scheme than you ordinarily would. So your experience with the bank is what it would normally be with us.
Tēnā koe anō, Heiko. That was Heiko Jonkers from Westpac. Moving along, in Heiko's presentation towards the end there, he talked about pastoral care that Westpac offers, but we're going to pass it over to one of the queens of pastoral care, person who's been working in the sorted Kāinga Order program for some time up in the Tamaki Makaurau area and around there. We'll save the best for last, so Lisa Nathan. Tēnā koe Lisa, anei tō wā.
Kia ora koutou, tēnei te mihi atu kia koutou katoa, mo te hui mai nei I tēnei ata, tēnā koutou katoa. I te taho tōku pāpā, no te whanga o Matauri me Patāraru, ko ngā puhi me Ngāti Raukawa ona iwi I te taha toku māma no Mamaranui, Kaihu me Manganui ia ko Ngāti Whātoi me Ngāti Kahu. Ona iwi, ko Lisa Nathan Ahau and kia ora whānau. Just a little bit about myself and my background and the reason why I'm here today. I actually run an education provider in Tāmaki Makaurau, so I do have a background in education, and part of what I'm going to be, what I'll be presenting today is really talking about getting whānau home loan ready. Now, a little bit about background there, as you can see on the presentation, I do come from both a housing and a business advisory background, but in terms of my housing background, my core focus over the last sort of 15 odd years is to really assist whānau into home ownership through education and mentoring support, and really about looking at what the type of pastoral care we do put in place for whānau to get them to that home loan readiness stage. So been doing that for a while now, and we've assisted over 200 whānaus into their first home throughout that duration, and it has become a lot more harder, as you could understand, getting whānau into homes because of the affordability issues. Also involved in other aspects of housing as a researcher for Ngā Waiata Tui, the Māori and Indigenous Research Centre at Unitec. My role there was to actually look at researching funding options for housing solutions for marae who were looking at putting some type of housing onto their land, and so that was a research area there. Also a chair or former chair of a Māori CHIP, a community housing provider in Tāmaki Makaurau, Kahuri Tū Kaha, and working particularly with the Kāinga Kore whānau, our homeless end, or those that are needing help with, that do have mental health disabilities. So that's an area of housing there that we're also involved in. Papa Kāinga subcommittee, it's been an interesting experience being on board our hapu Papa Kāinga, and really looking at ways of putting whānau back into, basically issuing license to occupy so whānau can actually build their homes onto the lands that they've been that they've applied for. So this PHO product is certainly an opportunity for some of our whānau to potentially look at that through the Matauri X up there in the north. Board member of Te Matapahi. I'm on actually Te Matapahi, been on board I think since about 2017, must be 4 or 5 years now. And there I'm a treasurer, but also on board the PHO in terms of the education and communications working group. So that's a little bit about the housing background there. But I'm going to talk a little bit about assisting whānau into home ownership. So Oka Business Solutions, what do we do, or who are we? We're an education provider, as I mentioned earlier, based in Auckland, been around since around about 2004, and we specialise in those 4 areas of education: business entrepreneurship, financial capability, particularly personal financial capability, home ownership and governance, and particularly with Māori organisations, land trusts and marae and hapu organisations is what we primarily work with. You can find out a little bit about my organisation by looking on our website there. But what I'd like to do is really talk about the opportunities for our whānau to become home loan ready. Now, today's presentation is really looking at the direct pathway, one of the 3 pathways. And so what's really important is for whānau to understand what are existing programs that could be out there that will help whānau to get to a home loan readiness stage. And they might be already there, but they might not realise that they are there. And so obviously part of accessing this program, the PHO program, whānau would need to really look at how not only becoming home loan ready, but being able to develop or demonstrate their financial capability in order to become home loan ready. So what does that do? Obviously, that gives comforts to lenders that you have the ability to be able to service the debt, service the mortgage, but also from if you decide to look at shared equity, or if you look at the shared equity program, it also gives the equity holder the comfort too that you have the ability to be able to repay that shared portion back over that duration as well. So So one of the programs I really wanted to highlight, there is a program out there at the moment. It is called Sorted Kāinga Ora. Please do not get confused with the title. Kāinga Ora here is, Sorted Kāinga Ora does not have anything to do with Kāinga Ora, the entity. What Sorted Kāinga Ora is a financial capability program that was co-developed between the Commission for Financial Capability and Te Puni Kōkiri. And what it is, it's really looking at focusing on providing whānau with a housing solution, whether that's home ownership or even papakainga, or even just really looking at moving along the housing continuum as well. So these are facilitated by approved providers. Te Puni Kōkiri are the ones who actually fund the program, the delivery of the program, and have limited funding available to the community, but they contract in approved providers to facilitate those out in Dorohe, and it covers those 8 topics or 8 modules there. So going through each of them, induction pathway to housing, well, this is where we really start introducing you to the housing continuum and looking at the different types of home ownership products there, such as rent to buy and shared equity being 2 that we do look at. Papakainga as well, we do look at that. Kiwi Build, or now it's going to be rebranded as Kiwi Buy, which is really aligns with the PHO product, is also discussed there. And also really looking at, what do banks look for when they're actually giving lending to you. So getting yourself ready before you get to the bank. Spending beliefs. Okay, this is obviously where we start looking at yourself as a person, your own character when it comes to making decisions around money and how you go about making those decisions. And it's really looking at your good habits, your bad habits, your ugly habits, and then moving those ugly and bad habits to good habits. And it's really just looking at getting you focused around achieving your goals, which is where number 3, money plans, comes into place. And that really does focus on not just goal setting, but also making sure that you can really afford this by updating and reviewing your own personal budget there, or household budget, shall I say. Motivations and money systems, where we get more into the specific goal setting of your home ownership goals, and money systems really looking at how do we systematize our spending and the way we operate our bank accounts. Debt and your rights. This is the process we go through. We look at what the different types of consumer debt that is out there that you might already have, and what's the best way of reducing debt. And also your rights as a consumer. If you were to take out debt, what is your understanding of what your rights are? We also go through that as well. Save Smart. We introduced KiwiSaver here. This is where we also get you to understand how you can use your KiwiSaver to actually purchase your first home. So we go through and cover that off. Plan for the unexpected is where we go through things such as planning for your death. So looking at estate planning, looking at making sure you've got your wills in place, power of attorneys. And while trust structures are not part of the topic there, we do normally, or Oka Business does normally include the topic of whānau trust, because we often get the questions about buying homes in a trust structure as well. And then the last one, looking ahead, is being able to put together your home ownership plan, or what we call your financial plan, so that you actually look at 1, reducing your debt if that's the priority, 2, being able to make sure you've got enough deposit, and 3, increase your chances of getting a home loan. There are other financial capability programs out there as outlined there. The Certificate in Money Management from Te Wānanga Aotearoa. It's a 20-week program. It is a level 3 NZQA approved program. It's a fantastic program. We're a facilitator of that program in Tāmaki Makaurau. It goes quite in depth into more areas than what the Sorted Kāinga Ora program does. But bearing in mind that because it's NZQA, there is quite a bit of expectations around assessment completion and attendance. Other programs there, He Papa Pūtea, MWDI, I'm not too sure if they're still rolling that out, but that's another great program too. Now with our Pacifica whānau, now we do have a mainstream education provider called Skills Update Limited, who recently won the tender to deliver the equivalent of Sorted Kāinga Ora to the Pacifica community, and that's called the Pacific People's Pathway. So again, for our Pacific whānau, that's an option there, but there are other sorted programs. There's a sorted website. The Cap Money course is a really good program. That's Christians Against Poverty, and Open Polytech also has Financial Skills for Lives, and some banks do have their own programs as well. So look, that's just really talking about whānau and their ability to be able to access the sort of kāinga order program. My encouragement, if you wish to access that program or know more about it, go to your local office at Punikokiri and ask if they have a sort of kāinga order program operating in their regions, and so they can actually put you through to the right provider in those rohes. Now, when it comes to the other two pathways, Te Au Takitaki and the provider pathway, one of the things that we are able to do is work with providers in not only potentially delivering financial capability and or pastoral care support to whānau, but we could also work with providers to basically build your internal capability, your internal pastoral care, your internal financial capability and facilitation skills of your own kaimahi, so they can go about and actually delivering this to your own whānau. So that's an area that we could work with. One of the, bearing in mind that if you were to become an approved PHO provider, is that the funding that's available for whānau, as I can recall, it's $7,000 per whānau pre-purchase to get whānau up or get whānau ready to actually take advantage of that purpose. And then there's an annual $1,800 maintenance fee or annual fee to assist providers with their ongoing checks or pastoral care. So part of that is being able to potentially implement an annual financial health check with whānau to determine if whānau are ready to purchase the additional share, if it is a shared equity program. And in that way, by being able to implement their annual reviews, they can then decide whether they're in a position not only to be able to purchase the share, but being able to really be to decide if the interest rates at that time, or what we normally encourage, and we normally add another 1% on the current interest rate, whether they can still afford it with an extra potentially 1.5% interest rate higher than what the current interest rates are at that time. Also, assess readiness of whānau to become eligible and apply for the actual scheme itself. That is an area that we might be able to support providers with, as well as strengthening their governance arrangements as well. Part of what we're able to also potentially consider is looking at what type of PH product may be best suitable for your organisation. And that's all depending on what your strengths of your organisation is, your strengths and your weaknesses of your organisation determine which PHO products could potentially suit your organisation. Now, we had 3 providers last week talk about their respective PHO products have been approved. And you could be looking at a combination of those products, or even your own product that you might want to develop that will need to go through that approval process. So again, that could be another area of support there. So just 3 takeaways there. Obviously, the first takeaway there is that to be able to take advantage of the PHO scheme, whānau needs to be home loan ready, and that there are programs that are available out there for whānau to be able to build their financial capability and get them home loan ready. And the third area there is really to be able to look at how approved providers to be able to demonstrate internal capabilities to deliver PHO products. So as an approved provider, you need to be able to show that. You need to be show that you not only have the financial capability, but also the other internal infrastructure capabilities within the organisation to be able to deliver this product in an effective way. So this is my contact details. You're more than welcome to contact me. That is not a problem whatsoever. Happy to chat about the financial capability programs out there. And yes, so look, I'd just like to say thank you very much for your time, and I'll pass that back to you. Thank you very much there, Mark. Kia ora, Mark.
O tēnā koe, Lisa. Thank you for that very informative presentation. Lisa, just before we move to the Q&A, you mentioned the good, the bad, the ugly What could whānau do in the meantime to get themselves financially ready for a home loan so that they can take up the opportunities like First Home Partner or to work with a provider? Kia ora, Lisa.
Yeah, well, one of the things you could do is to actually order your own credit report, to be quite honest. So there's a number of different credit reporting agencies out there that you can actually go to be able to order a free credit report on yourself, to be able to assess is there any surprises there that you might not even be aware of, because often whānau are not aware until they get to a mortgage broker or to the bank, who then get a credit report done on them to then find out, well, actually there are some issues there that actually need to be resolved and sorted out before they can get to the approval stage. So that's certainly one thing I would encourage whānau to do, is really look at getting a credit report done on themselves. There are different types of credit reporting agencies out there, including Vida, including we've got Credit Simple, and so again, have a look to see what's out there, and that will be a good starting point. Also would encourage you just to really do a stock take on your current financial status, your current financial situation at the moment, and that's looking at your spending and being objective, reviewing the last 3 months of your bank statements and look what's coming in, what's going out, and just being objective in terms of where your spending's going, because banks will ask for 3 to 6 months worth of bank statements, and they'll assess your character by the way you are spending based on what's your bank statement. So I would encourage that too. So kia ora.
Tēnā koe, Lisa. I want to just thank all the presenters today that presented. We had our two from Kāinga Ora, Eli Salmons and Stephen Naika, Heiko Jonkers from Westpac, and of course Lisa Nathan talking about her sorted Kāinga Ora program. We're moving to Q&A now, and just before we do that, I'll give the speakers a bit of a breath. We're going to look at some of the answered questions, so those of you that have not seen the answers, I'm just going to read out a couple of these if I can. We had our top one here, voted Tēnā koe Irene, Tēnā koe Te Uri no Ngāti Whanaunga. Her question was, did you mention the equity contribution is not a loan, and does it need to be paid back? Heiko replied by, kia ora Irene, you are right that the equity contribution is not a loan, but the equity contribution does need to be paid back. The difference is that you can elect when you make repayments and how much you repay with certain minimums. Your PHO provider will help you understand how that process works. Another question from Rondell Reihana, can the 5% deposit be made up of KiwiSaver and or First Home Grant? And the answer from Heiko was yes, the KiwiSaver component and First Home Grant can be put towards the 5% deposit. And a question from an anonymous attendee, will this process work fast enough for a family to be able to buy off the plans in a very competitive market, i.e. will the money for the down payment be available in time? Heiko replied to that, I would encourage applicants to work closely with their chosen program's pastoral care program to understand the risks of buying off the plans and whether that pathway is suitable. At a minimum, whānau should look for a level of cost certainty on the part of the builder and a commitment to the time frame to build the home. Rondell also asks, you mentioned the maximum available in this product is 200K. Eli replied by, that's correct, the lesser of 25% or 200K. And maybe, Eli, if we could think about what you mean by the lesser of 25%, and maybe where that applies. So do a little bit of a comparison between, I guess, Auckland and other regions. The share that Kāinga Ora will contribute is determined by serviceability and total purchase price of the property. And finally, I'll just answer one more question, I think, here by Hemi Toya. Do we engage with Westpac at a local branch level or other? Heiko said you can come into one of our branches who will put you in touch with one of our mobile mortgage managers. Our branch staff can also help you broadly understand the bank requirements. I do have another. I think this is probably a question worth answering. This is from Lorraine Nelson. When is the homeowner expected to fully own the home by? Heiko replied, the time frame is dependent on the whānau's capacity to repay the equity. Most schemes expect the equity to be repaid within 15 years, and there is a commitment to repay within 25 years. On average, most whānau successfully repay the equity within about 8 years, and that tends to be the case that we've heard also from the other two pathways. So those were some of the answered questions. We're going to move straight into, for the panel, some of the questions from everyone else. So from Te Miringa Mihaka, will you work with whānau on benefits, or is this just for working households? I'll throw that over to the panel.
Cool. In regards to first home partner, we have had applicants that have been on receiving beneficiaries, and we have assessed them and they've met our criteria. They will have to be aware of certain circumstances around the area that they live in, the house prices as well. And they will basically have to be considerate of which bank that they will look to go to as well. So they do have to be aware of a few things in that aspect as well. So basically, when we look at your income, we look at your 12 months of earnings that you've had in your prior 12 months. As long as it doesn't exceed that 130K, then we're absolutely fine with that. It can come derived from beneficiary income. It can come from anything else as well. So we're absolutely fine with that.
Thanks, Stephen. Another question from Brian Hey. Does the kāinga order lending criteria still need to meet the Kiwibank standards or criteria, or is it an easier bar to meet for whānau that typically don't meet Kiwibank's lending criteria?
Okay, so once again, our one's not necessarily a lending criteria; it's an eligibility criteria. We don't assess in terms of how banks usually do. We have our own set of eligibility criteria, whereas do you meet the income cap? Are you a New Zealand citizen? Have you owned prior property as well? The deposit component as well. We'll look at that. So that's how it works for us. So we assess you on eligibility stage, provide you a letter saying, hey, look, cool, we're willing to support you in first home partner. You go to the banks and obviously get that pre-approval, conditional approval as a mortgage. Come back to us, and then we assess you basically on terms of the property. So not really privy to anything in Kiwibank's lending criteria, so I'm not able to confirm that, but we are not a lender, so we most likely don't have that similar criteria with them.
One thing to mention also on that is the participating banks for first home partner, and so Westpac is obviously one of them, along with BNZ.
I can probably add to that answer as well, is that participants in the schemes will need to meet the bank lending criteria. I mean, that the bank loan is part and parcel of success in the scheme. So if there is a reason that an applicant doesn't meet a certain bank's criteria, the best thing to do is to discuss that with the bank, understand what the issue was that made it unable for a particular bank to lend, and see whether we can work through that to still be able to provide you a loan, or it might be a matter of, as Lisa alluded to, working with your pastoral care program to understand what the issue was, mitigate it over time, and then maybe in 6 to 12 months, then that issue becomes less of a concern for the bank, and we can then provide the loan.
Another question from an anonymous attendee: do you have to be a kāinga order tenant to access full home ownership? If you see an existing kāinga order property that has been vacant, how can someone send a pānui to kāinga order to purchase the whare?
So sorry, was that you, Eli?
Oh, either one. So you don't have to be a kāinga order tenant in order to utilize the first home partner product. It is targeted towards mainstream, so anyone can access that. In terms of kāinga order property that are vacants, they may be, there is a process in terms of assets within kāinga order that you can inquire as to which particular properties can be sold if you are a tenant in that particular property.
Nothing else from you, Stephen?
No, so basically that process is the tenant home ownership process. So if you're an existing tenant, you can inquire in regards to that from our website to see whether you can purchase the property that you're existing in and residing in. Again, one other thing just to note as well is we're not necessarily trying to sell our social housing stock as well. We're basically trying to keep that going and improve upon it. So keep an eye on that. But once again, if you are an existing tenant from kāinga order looking to purchase that. Our tenant home ownership team can assess that. And if you've got anything that you want, our website has the information there with inquiries mailboxes as well to find out information, and we can potentially direct you to those people as well.
Tēnā koe, Stephen. Here's a question from Malcolm Wada. If whānau are interested in building on tupuna whenua, aka Māori freehold titled land, what is kāinga orders whakaaro?
Cool. Could you repeat that again, Mark? Sorry. Couldn't quite.
Yeah, sorry, even though I might have broken up there. Question from Malcolm. If whānau are interested in building on tupuna whenua, that is Māori freehold titled land, what is kāinga orders whakaaro? What do you guys think?
Once again, that's something we'll probably have to discuss with and take to our management at the moment. I don't think has been substantially played out as a scenario at the moment. Currently, it's just general freehold land and that type of discussion. Once again, we'll also have to contact all the other relevant parties as well involved, with the banks and such as well. Obviously, we've got other products such as kāinga whenua and such. So once again, though, unfortunately, I can't really divulge a proper answer, but it can be passed on to the relevant people and see whether that can be looked at as something that we can utilize first home partner with or not. So it's an unfortunate maybe answer, to be honest, but we can potentially look at that. There's something that we have highlighted. Look, let's see, can we use this or not?
Thanks, Stephen. Here's a question from Donette Kupinga. Can we get a rough timeline? How long the process, I guess the first home partner process will take from start to home ownership? Cool.
So from application to getting eligibility, we're looking at 5 days. Then the part that varies a lot of the time frame is between finding a property for a person, right? So that can obviously change and make it short or long. So if a person finds a property and has all the clauses that a kāinga ora wants attached, we could potentially look to get a process done within probably a month, to be honest. But a lot of that depends on vendors accepting our clauses, customers not going ahead and signing the sales and purchase without kāinga ora's involvement and having us actually put in that sales and purchase as tenants in common. And once again, I think with the bank side of things, we'd expect roughly, not too sure if Heiko can probably intervene and advise us, a response time within a week or so. So potentially we could look at within a month from our side.
I can add to that, kia ora, Mark. Our approval process typically take between 1 and 2 weeks, depending on how complete the information is. And we can quite happily work in parallel with the process at kāinga ora. So if whānau have a house in mind and that house is available and the price is agreed, then it can be incredibly quick.
Yeah. Once again, as Heiko mentioned, it's have you identified a property as well and the information presented for both you, Westpac, us, and any other providers, any other participating banks as well. So once again, it's about having all the ducks lined up.
Tēnā koe, Stephen and Heiko. Here's a question from Scarlett Mokaraka. There's probably 3 questions in this, so I'll just go slow on this. And I think this might be for you, Heiko, but anyone is open to answer this. Who provides designs / supports Westpac's pastoral care? First question. Can we see a model or approach that you take for pastoral care? That's possibly the second question. And what considerations are included?
Oh, that's a great question, actually. In fact, I upvoted that one myself because I really wanted to answer it live. So first, I guess to answer the first question is that it's not Westpac's pastoral care program. The pastoral care program is very much part of the program provider's program. And it's their opportunity to really tailor a program that is suitable to their clients and demographics, and is entirely it's entirely up to them how that program is designed. Some of the key things that we look to, and Lisa touched on this really well in her presentation, financial support, budgeting support, financial planning, some advice on taking care of a home, dealing with the stresses, what to do when there's a bump on the road, potentially some support if you need to, you're having trouble dealing with the bank, how that would work. All of those sorts of sort of key things. So really, just to reiterate, it is up to the program provider how that pastoral care program is put together. The key thing that we look for is that the program is there and available, and that whānau are supported through their journey into shared equity.
Another question from Scarlett. Has there been legal consult/conveyances included in the design of these programs to ensure efficiency in the legal process for sales or purchases through the PHO programs?
I can probably jump on that one, and there might be, Eli might want to come into it as well. So there are probably two processes to think about. There's the initial purchase of the house, which that process is really routine. Any solicitor, any conveyancer, just they know exactly what to do. In some cases, depending on what promotion Westpac is running, sometimes there's even assistance with costs for conveyancing. It just depends on what our marketing team is doing. So that's the initial purchase of the house. And then there is the ongoing repurchase of the equity. And we've worked very closely with all the program providers, especially New Zealand Housing Foundation and Kāinga Ora, to make sure those processes for assessing the value of the house and working out how much equity or how much equity share is being purchased for the dollar amount that's being provided is as smooth and efficient as possible. So the short answer is yes, that has been included in the design, and we've been really focused on keeping any friction costs as low as we possibly can.
Yeah, and just adding on to that, with First Home Partner, there has been engagement with legal consultants in terms of designing the feature, as well as ongoing process developments. So obviously it is a new product, and we are going through some of that onboarding of the purchases that are being acquired. So we are engaging with legal teams, both internal and external, to try and make that process simple for both ourselves and the applicants.
Kia ora, Eli. Does Kāinga Ora have any programs they have developed where service providers can be accredited, where you verify the quality of their services for whānau through these programs and processes?
In short, I would say no. We haven't developed or have any products that tend to look at service providers and how they offer services from their end. The support we provide is just that engagement around what they are providing in the community and being on board as to what they are trying to achieve within their areas.
Thanks, Eli. I think this is for you, Heiko, but you
Sure.
mentioned Westpac has an off-site manufacturing homes. Is there information available on what these homes or plans are and how they can be considered by whānau, please?
Sure. The product that we offer is financial support for building the home off-site. So whānau are free to engage with the off-site manufacturer of their choice. And as long as the house that's being built is a consented home and that's going to be eventually affixed to site, then really what we are looking at is the construction method. And Westpac has figured out a way of securing that home while it's being built. And that's really important because there are certain credit risks, which I won't go into the detail here, that we've mitigated to protect whānau. So there are no designs that Westpac pushes. You're completely free to engage with whichever builder you wish, and then we help both the whānau and the builder understand what contractual requirements are needed just to again mitigate certain credit risks, and then the process basically runs as a normal construction loan after that.
Kia ora, Heiko. Another question from Rondell. There was mention of paying back equity. Who is paid back to, and how is this determined about what should be paid, considering the varying valuations at the time of signing for a mortgage and the time frame of when those equity repayments may actually commence, e.g. could be after 5 years perhaps?
That's a great question, and it's really important that whānau understand that process. So basically what happens is at the beginning of the agreement, whānau will take out a mortgage with their chosen bank, and then alongside that mortgage is the equity contribution from the equity provider and their own equity. So the commitments to repay the mortgage start on day one, and they are obviously contractual commitments that roll through until that mortgage is repaid. Now the equity repayment is repaid to the equity provider, so it's not the bank, it's repaid to the equity provider. And the timing and the amount that is repaid is elected by the participant. So you don't have to pay back 100% at one time. I think the minimum for Kāinga Ora is about 5%, but programs vary. What happens is that whānau will contact their chosen provider at the time of the repayment. The house will be valued to make sure that the right value is repaid. And then whatever funds are available are paid to the equity provider, and the equivalent share is then passed over to the whānau. So they will own a larger proportion of the home. Now, generally how it happens is over time, the income of families increase, the value of the house increases, which means the borrowing capacity increases, or there may have been a windfall that comes to the whānau that they can apply, or they've managed to save the funds that are required, and they're just incrementally paying that equity share off. So it's a really important process to get into early. And just that last comment around that the equity payments may commence 5 years after the home is purchased. So yes, the home could be worth more, but it's important to remember the proportion. So say, for example, in the purchase, the whānau owned 65% of the home and Kāinga Ora owned 30% of the home. If the house doubles in value, then, because that does happen in Auckland, then whānau still own 65% of that higher value. So there's been a lot of financial growth through that period. So while the dollar amount that needs to be repaid to the equity provider has also increased, it's important to remember that the family own a share of a more valuable asset, and that's the key part of it. So they're growing financially through that process. But those are really great questions, and if families or whānau are unsure about how that process works, that's where that pastoral care program comes in. That's where that financial advice and support piece comes in, and it's really important to understand how those mechanics work. Also, our mobile mortgage managers can help. They are qualified financial advisors, and they can help whānau understand how that process works.
Tēnā koe, Heiko. Question again from Scarlett. Multi-generational income cap. Does this differ from the 130K cap?
Yes, that does. So we look at each region and we calculate 140% median income of that region. So in certain places, we take Auckland, for example, higher house prices and pretty much more demand in that area. So we know that, there's obviously more competition, trying to get more families into households. So there's multi-generational families. The income cap is higher than 130. So off the top of my head, this may not be exact, but it's roughly $155,000. Those ones will obviously get reviewed yearly because it's pulled from Statistics New Zealand as well. And though we do have an idea as well, there's multi-generational families in other regions that may not be as financially, median income levels compared to Auckland, we will take discretion in regards to that and see, whether the 130,000 applies or whether the multi-generational cap. So there is that ability there. What we're trying to do is get more families into households and give them that better opportunity as well.
Thanks, Stephen. What if you are below the income requirement threshold?
So we don't necessarily have a level that's below. So our income criteria works on cannot have income more than 130,000 within that 12-month period. We do have conversations with customers who may have a lower level of income. So we do advise them, look, you're going to have to look at your borrowing capacity with banks, maybe trying out online calculators, looking at your region. So if you're looking at potentially, I may try Auckland or Huntly or have another different area, to have a look at those online and see what sort of prices there are and your household composition. So if you're a single person, we advise you to look at 1-bedroom places within that region and your income. Also to have that conversation with the banks as well. It doesn't hurt having that conversation and saying, hey, look, I'm just inquiring about, what are my chances of obtaining a loan and such. So we do like to try and prepare people as best we can via phone calls.
I can potentially add to that very briefly, Mark, if I may, that the Westpac credit approval process will provide a loan that is within the affordability capacity of the borrower. So it doesn't particularly matter if a particular whānau is below the maximum threshold requirement of a particular program. We will right-size the loan within the borrower's affordability, and that's our obligation and our responsibility really to the whānau. And then the difference becomes the equity amount that is required to balance the borrowing capacity and the equity that the whānau is already bringing in. And provided that those amounts line up to purchase the house, then that's how that equation will come together.
Kia ora, Heiko. Perhaps a non-related question, but I'm going to ask it anyway. It's from Te Miringa Mihaka. If anybody here knows, please answer. Is the 70 square metre minimum size of transportable still a requisite for the Kāinga Whenua product, or is it possible to use a smaller whare, e.g. 50 squares?
So Kāinga Whenua, so there is recent work being done within regards to Kāinga Whenua at the moment with the policy. So there may be some changes coming about from that. So it's currently being worked with our product managers and Kiwi Bank. So nothing has been put in concrete at the moment. So I would advise just to hold off at the moment and probably inquire with Kiwi Bank sometime next week. And hopefully that can be done fairly soon.
Thanks, Stephen, again. Does Kāinga Ora have any ambitions to support whānau through Papa Kāinga occupation in partnership with Te Ture Whenua?
So in relation to further helping in regards to Papa Kāinga, Kāinga Ora is potentially looking at sort of these things. We haven't really gone into active discussions from what I'm aware of. There may be different departments within Kāinga Ora that are looking at it as well. So we have other areas which may have been ongoing discussions with that, but I'm not really privy to that, so I won't necessarily be able to give you a concrete answer to that. But look, all these questions in there, I've seen a few of them in regards to whether we are partnering in Papa Kāinga and such. We can potentially look into those as well. May have to reach out to different departments and stakeholder engagers and to figure out whether we are doing that. But currently, from what I've known, there is no actual product nor anything that's actively currently being delivered. But that may not necessarily mean there's engagement going on to see how that can actually be facilitated.
Kia ora, Stephen. I'm going to take just two more questions. Our time's near coming to an end. The question from an anonymous attendee, is Westpac the only bank who accommodates PHO products, or are there other banks willing to work with our whānau as well?
In terms of first home partner, we are working alongside the likes of Westpac and BNZ. We are also in discussion of onboarding other major and smaller bank lenders as well, and hopefully they will be on board this side of Christmas, and that they are SBS and Kiwibank.
Yeah, I can add to that briefly. I believe that the New Zealand Housing Foundation also has a relationship with ASB, just from memory. It may be a question of just working closely with your chosen PHO provider to understand whether they've struck their own relationships with a particular bank. But certainly, just reiterating what Eli's comment was, Westpac and BNZ are strong supporters of PHO programs, and I know that some of the other banks are just waiting for the PHO scene to develop a little bit to help them understand what their how their regulatory commitments fit in, and I expect that they will join as well. So it should give whānau a quite wide choice of banking providers.
Got it, Heiko. And because Lisa hasn't said anything, I'm going to go right to the preliminary question that is specifically for Lisa, because we always save the best for last. So this is a question for you. Once again, it's not strictly related to first home partner in this series, but it says, under the unitary plan, Māori freehold land zoned as mixed rural are only given the option of building a small size home and a small amount of homes. Is there a way to get around this?
Oh gosh, and I think I did answer that in the box there. Look, that's a regulatory question, and one of the things that's really difficult to be able to contract out of law or any bylaw as the case. Look, my only recommendation is to be able to advocate with your local MP, particularly Māori MP, to be able to look and address that particular issue, because there'll be other landowners that will also have similar issues too. So the question is, why is there that restriction in place? And I'm not able to answer that specifically. So look, I wish I could give you the answer, but really it is about going back to your local Māori MP and being able to lobby and advocate for change there, and being able to understand what the policy rationale behind it, and whether there is change that could be made as a result. So I wish I could answer that a bit better than that, but aroha mai.
Tēnā koe, Lisa. Thank you anyway. And thank you all for contributing, and whānau out there for asking those questions. Finally, again, I just want to mihi out to our kai kōrero today, our pai kōrero. Tuatahi kia kōrua, kia Eli Salmons and Stephen Naika from Kāinga Ora, from Westpac, Heiko Yonkers, and from the Oka business. Tēnā koe, Lisa. Hoia no koutou mā, huri no, tēnā koutou katoa, tēnei te mihi atu kia koutou. Hoia no whānau, huri no te motu, tēnā koutou, kia ora mai tātou katoa, ka huri.